Crude oil last week hit the lows at 65 again and respected the levels. And yes, we have discussed several times that the zone between 65 to 67 is going to remain critical for crude oil. Now, this is happening after a series of bearish candles that we have seen an indecision here. We have seen slight signs of a good support coming in and a sign of reversal. Can we say that the oil prices have bottomed? Can we expect a rise here? And yes, can we expect oil to trade beyond $70 levels, or the further bearishness is going to be there? What is going to be our strategy in order to profit trading crude oil in the coming week? We're gonna see with the help of charts and indicators, and towards the end of this update I'll share the trading levels and strategy, so watch it. Also, this is a weekly review. I do share my twice a day updates with logical levels and precise targets, first with the Asia and Europe session every day, and then next with the US session. Thus, subscribe, press the bell icon, do like, share, and comment. Join the free Telegram channel for live updates, and join the channel memberships here on YouTube to support them. Let's start first on the weekly charts. See, 65. This is the level. This is oil is testing third time in last 6 to 8 months. And if you look at the history here for last 3 years, you will find this is the first attempt to break below 65, second, third, fourth, and fifth. On the weekly chart, this is the fifth attempt by oil to trade below 65. But notice none of the candles closed below 65. And also, if you notice, in fact, none of the candles closed below 66.8. This is very, very important. This makes these levels as a critical support zone. And that is why I say 65, 67 should be a very, very good support. Now, what is happening here, if you look at the last few months and years chart, you will find lower highs are consistently created. Look at the highs here. The trend line on the upside is pretty much supported, while on the downside, it's a flat bottom. So yes, it's a squeeze here. When oil comes out of this squeeze zone, which means when oil trades below 65 and 64 levels, 63.6 levels rather, we can expect a move towards 61 and $60 levels. Yes, if it comes out of this squeeze, we are looking forward to a greater correction in oil price. However, it is too early to conclude with that. If you look at the moving averages, these are trading with divergence and bearishness. But when you look at the movement for the near term, you can find out, say, steps are created, lower highs and lower lows are there. The top of the chart is now at around 70, 72. And the third thing here is, see, after series of bearish candle, it is showing signs of a reversal. So now in the coming week, if you see oil trading beyond 68.4, 68.6, that is the first resistance zone, you can expect that the next target is going to be all the way towards 69.3, 69.6 zone first, and then 70.4, 70.5 second. If these two levels are taken, you can say it's a reversal, and then you can look forward to the next target at 73. But right now, I can say too early to conclude with that. Let's have a further look. The weekly stochastic is oversold, now trying to show a bounce back. If you look at the now MACD on the other hand has crossed over for a sell. Now post crossover, it is just couple of candles away, which suggests that there could be further bearishness. So these are mixed indication. On the one hand, on the stochastic, it is oversold, while the MACD has just crossed over, which is still looking downwards, which is not a good sign for the bulls. And this suggests that downside is wide open. And hence, that is why I say a drop below 65 should confirm further bearishness. RSI has dropped, which is again a bearish sign here. Coming to the now, look at the daily charts. What's happening on the daily charts? After this drop, what has happened? Slight retracement. Now, after this, it is just consolidated in a zone for multiple sessions, almost couple of weeks. It is consolidated in a zone. Now, once it came out of this zone, that is what I had mentioned. Once it drops below this zone, you can expect a correction, and that is what has happened. So, first round of rise, drop, then second consolidation, then second round of drop here. Now, post this drop, it is just consolidated. And if you look at the move here, you can find out post the reversal confirmation, one bullish candle retracement, couple of bullish candle retracement, and it is delivering higher lows, higher highs. Now, very, very important for oil to trade beyond 68, 68.4 zone. That is the 20 period moving average. Beyond this, we can look forward to 70, 70.5 levels possibly. But when you look at the stochastic after hitting the bottom, it has already seen a very good up move here. It is still having further room for a rise here. While look at the MACD on the daily charts, this is very important because see, when you look at the MACD, it has taken a strong dump here, and post this dump, it is on the verge of a crossover. Now, if you notice this rise, retracement rise, it has shown a bigger dump and it is now trying to bounce back. So once it bounces back, again, you can expect a stronger round of bull run here. And thus, as we discussed, the critical levels on the upside are going to play a major role. If you see it is staying above 67.3, 67.6 zone, stay bullish, expect 68.4, 68.5. And yes, 68 is also one of the resistances, then 68.4, 68.5. Beyond this, we can expect 69.3 and then $70 level should appear, which should be the next resistance zone here. If you look at the RSI, after hitting the bottom, it is trying to bounce back. On the 4 now likewise on the 4-hour chart, see moving averages after staying bearish have started to converge. But the important point to note here is the consolidation of the price between 20 and 50 period moving average. The next thing is it has formed a double bottom, and after forming the double bottom, it is now looking upwards. Now notice this, just connect the lows here, you will find it is delivering higher lows, and when you connect the highs you can find out lower highs are also seen. So this is a consolidation zone which oil has to come out of, and thus very important for oil to trade now beyond 67.6 and 68.4 on the upside, or 66 and 65 on the downside. Very important these levels are going to be. The stochastic has also now retraced towards the comfortable zone, and when you look at the MACD, this is after the retracement running flat. The RSI is running flat as well. Coming to the month. Now on the monthly charts, notice this, as we have already seen, see, since 2021, this is post COVID, when we have seen the lows and the recovery here. What has happened? None of the candles have closed below 65. This is very important. Almost for last 5 years, the $65 levels have proven out to be a greater support, and it is again back to the same zone. Also on the monthly charts, now moving averages are on the verge of a crossover, which is a slight bearish rise sign. Then the next thing is, see, a flat base was created, then a retracement, and now second bearish candle. Now where this current candle closes is going to be of prime importance. See what is happening, this is a symmetrical move here. First bullish candle bounce back with a smaller body and a bigger wick. What could happen with this one red candle and a smaller body? Smaller body means, if you see, by month end, oil closing above 68. Yes, closing above 68 by month end. So if you see by March end, 31st of March, if you look at the oil closing above 68, then we can definitely say that the month of April is going to be bullish again, and then we can look forward to the highs at 74 levels possibly. But right now it is trading bearish, it is looking downwards, though 65 is a good support, but all the supports are meant to be taken some point of time. So very important this point is, if you look at the stochastic, this is looking downwards, the MACD is delivering the waves, and this wave is not culminating here, it is not crossing over. A crossover is what is required to confirm the bullishness here. Yes, a crossover is what, and right now it is pretty far from crossing over. It requires 2 to 3 months of bullishness in order to confirm the crossover. The RSI is looking downwards, which is again a bearish sign. So now we have seen the charts and indicators. Time for me to give you the trading levels and strategy. And before I provide you the levels, if you want to learn this art of trading, join my mentorship batch. And if you just want to trade as per the signals, be a part of my signals channel on Telegram. Connect with me, write an email, ping me over Telegram for your queries. And if you're looking forward to a broker which offers you a swap-free account with lowest spreads and no hidden charges, easier transactions and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. So now, considering the move here, I will recommend you to buy here at 67.3, expect 67.8, 68 as the first resistance zone. Very good resistance is seen here. Then I will wait for 68.4, 68.5 zone, the next target zone, and if this is taken, then stay bullish for 69.3, 69.4 levels. Very good resistance here as well. If this is taken, then you can expect the next target to be around 70.2, 70.5. Any move beyond this is a clear sign of the next move towards 72, 73.2, and 74. Remember, if it can drop sharp, it can bounce back sharp as well. But I can see a greater struggle there. If at all oil moves upside, I can see a greater struggle around $70 levels. And hence you should be trading with caution. On the downside, I will recommend a selling entry at 66.7 levels. Expect 66.4, 66, 65.8. Now this is going to be a very good support zone here on the downside, because once it trades below 65.8, possibility will be very high that we are going to retest 65. Any drop below 65 should take it all the way towards 64.3, and then if 64.3 is taken, stay short for 63.6. Now remember, once oil trades below 63.6 in this week, next week, or the near future, you can expect the next target to be at 62 and 60, the most critical one at 60, which is a great psychological support as of now, because below this, chances are high that we may see a greater correction. So take your positions, take your trades accordingly. Like, share, subscribe, and comment. Join my mentorship batch, join my signals channel. Reach out to me for your queries. Join the free Telegram channel for live updates, and join the channel memberships here on YouTube to support the effort. Thank you very much. Have a great profitable trading week ahead and a happy weekend.